All right. Welcome back to the UnMastered class where we simplify the complex and we shed light on the murky waters of adulting. I'm Jake Dreyfus.
And I am Lance Pendleton.
Today, friends, we are demystifying a topic that might make some of you sweat just hearing about it. And hopefully you've actually just dealt with it. Your taxes.
Yeah, but let's not get too scared right off the bat, because today we're joined by someone I would honestly be completely lost without. She is the genius who keeps all of my business affairs and many of my personal affairs financially in order as well, too. We're talking my actual personal CPA, Candace Galiffa. Candace, welcome to the show.
Guys, I'm so excited to be here.
We probably should start every episode this way, but for sure this one, we're going to do a little disclaimer. So before we begin, we just want to issue a quick disclaimer that nothing we're about to talk about today is like personal financial advice for any one of us to take and run with. This is just a general discussion, and any questions you have should be taken to your CPA or to Candace, whose information will be in the show notes here. Always looking to help out more folks, so just want to put that out there first.
Sure. As another side note, we might want to add into this one too, that disclaimer you just put in there should be probably applicable for all of our podcasts. 100%. Anything that we just told 100%. you probably shouldn't be listening to us on the whole, but that's okay.
Certainly the food safety.
Yeah.
That should definitely have one. Great episode, by the way. Go back and check that one out. So let's set the table a little bit here before we dive in and try to pull everything out of Candace's brain. So based on our research from Pew, 53% of Americans say they're frustrated by the complexity of the federal tax system. Lance and I were chatting before the episode. That seems remarkably low. And on our hypothesis, it's just based on the people who are actually paying taxes who are frustrated by it. So maybe that's why it's 53%.
Yeah, and you just said too that like 47. That means 47% of the population is going, "Yep, no, I got it. That whole tax system makes complete sense to me." And I'm like,
"No way,
it doesn't, you liars!"
And for about every 30 taxpayers who file their tax returns every year, there's one business or household that doesn't. So that does speak to our hypothesis on who's doing what.
It sounds so interesting too, because again, we started in this concept, and Jake and I started talking about this, and like this is one of those areas that we just kick into, of like we probably should understand this better and know more, but it is interesting because no one ever taught us this. And it seems like a pretty important thing. Like, if you think about this, I'm going to go to jail if I get this wrong. Like, that's kind of something that maybe I should have been taught in school, but okay. But before we dive in, Candace, welcome. A little background on yourself, sort of what brought you to your love of being a CPA and numbers and all that good stuff, or actually the business that you run, but just a quick background on you.
Yeah, sure. Well, thanks. So I'm a CPA. I started my career in public accounting, some soul-crushing hours at PwC at the Big Four as an auditor. Moved up into industry accounting, in financial reporting, in banking and investments, all the like fancy titles where you're just working tons and tons of hours. And then I had a kiddo, and I was like, I'm not going to do the crazy hours with a kid. I come from a family of entrepreneurs, and I was like, you know what I'm going to do? I'm going to do a cute little side hustle. I'm just going to do some bookkeeping and taxes for a couple local small businesses during naps and on the weekends so I can be a stay-at-home mom. And it totally exploded. It just absolutely took off. Within a year, my husband likes to say I retired him, and he's a stay-at-home dad now. Now we have 17 people on our team, and we work with entrepreneurs across the country because we found this niche of underserved entrepreneurs. You know, so many small business owners, especially millennials, are working with the dinosaur in a suit, the CPA that doesn't return their phone calls and their emails and can't believe they're actually making money off of a podcast. That's not a real business, right? Like, just the really condescending. So we totally fell into this niche of business owners spread across the country, and it's been really awesome. I get to, work with people like us, right? And it's super cool. So it's been a dream.
It's awesome. I guess to kick things off, we have a lot of questions, as you saw in our email. We'll try to be calm, but let's start with the beginning. I think I have the hypothesis that I think a lot of people inherit accountants, maybe because their family was using them or whatever the case may be.
Yep.
So let's start with the basics. When it comes to taxes and having the right accountant is key. I think we can all probably agree on that. What are some of the things that someone should look for in an accountant to ensure they're a good fit? What are the questions we should be asking? How do we find the right person?
Yeah, it's such a great question. And it's kind of sad, this first thing, right? Because when I talk to folks, potential clients or new clients, almost everyone is like, well, I've been working with my dad's CPA, or I've been working with so-and-so down the street, but they just don't return my email. They just don't return my calls, which is isn't that business 101? So that's honestly the first thing I tell folks is when you're looking for a CPA, you're looking for an accountant, ask them their response times. Make sure they actually will talk to you even in July, right? Make sure they'll talk to you year round. So that's the first thing. Make sure you get vibes. And then the second thing is, you can't, as a consumer, as a taxpayer, you can't really do a ton of research to make sure that your CPA actually knows what the hell they're talking about, right? There's no place for you to go to be like, is this person, legit? So what I always tell people is you want to make sure you're comfortable with them because you don't know what you don't know. And so another reason we get new folks coming in, they're always like, I just felt really dumb asking these questions, or they were a little condescending when I asked these questions. So when you're chatting with someone, make sure you feel really good, warm and fuzzy to ask any questions that you want, because you're not supposed to know this stuff. We always joke around with new clients, we all had to take square dancing and wood shop in high school, but none of us had to take tax 101. Isn't that kind of bonkers to everyone? So you should be able to ask any question and feel really friendly and nicely responded to, because there's no dumb questions when it comes to taxes.
It's so interesting. And, it is actually part of what drew me to working with you, because I had gone through literally 4 years and 5 different accountants in 4 years. Because everyone in the very beginning, it was the same thing. It was oh yeah, we can do this and we can do that. It was a lot of we can do. And then very quickly it became obvious that I got passed off to some, poor schlub because I wasn't as cool or important, right, as the big people they had, right? And again, you talk about being passed off to the family people. Yeah, my parents are more important. And, so it was really interesting to just watch that dynamic then repeat for each person I went to. So when I came across your whole organization, I was like, whoa, this is what I've been looking for. But
thank you.
But I want to ask you the one question that I thought of, right, that I think a lot of people think of, which is probably the worst question you can possibly ask a CPA right off the bat because it makes you look guilty, but it really came from a place of fear. You ready? How often are people really audited? How can you avoid going to jail because of your taxes? Because I'm always living in fear of this, but I'm I want to, save a few bucks here, but I really don't want to go to jail. I wouldn't do well in jail. Let's be really clear. I would not do well in jail. I would be modeling tank tops for some dude and with Kool-Aid on my lips in 5 seconds flat. How often are people really audited?
You're way too handsome for prison. So here's some good news for you. Here's so everyone can sleep easier at night. Only less than 1% of taxpayers are audited. And if you are a business owner and it makes sense to elect to be taxed as an S corporation, your audit rate goes down even further. Now, with that being said, the IRS there was legislation that passed last winter, that said the IRS was getting $80 billion with a B in funding to basically up a lot of their auditing people. But here's the great thing though, they're going to be focusing on folks that are high earners, generally speaking, making more than $400,000. So the average taxpayer, your odds of being audited are under 1%. Now, does that mean you should start writing off all of your shit? Should you start claiming your dog as a dependent? No, let's not be crazy. You want to still do it right so you can sleep all night, because the other thing that folks a lot of time forget that those audit rates are really low, but the IRS every day sends out these automated letters, right? So your tax return just churns through their algorithm and their computer system. And if something looks crazy wonky or it sticks out based off of their averages, you can get an automated letter that's hey, what's this? Send us the documentation. And so if you don't have that documentation, they're like, oh, sorry, we can't count that then. Pay us money. So what I always tell people is you should sleep sound, right? Audit rates are at a historic low. Not a ton of people are getting audited, but do it right? Don't be ridiculous, right? Don't claim your dog as a dependent, and keep track of your documentation so that if you are the lucky 1%, you have the support to back it up.
Okay, so there's a middle step there. You're not just going to Lance literally thinks someone's going to show up on his doorstep like Men in Black and take him away to 100% because he wrote off his meal at Chick-fil-A.
No, you're not. People really don't go to jail often. There's so much that happens before that. First, you're going to get first thing, the IRS will never ever call you or email. So that's the first thing, right? If you get a phone call, it's spam, just click ignore. The IRS will mail you because they're stuck in the 80s, so they 100% will send you a letter And again, when you get those letters, if you don't understand it, and you don't have an accountant, get yourself an accountant, but just pass it to your accountant. What does this mean? Let them interpret it for you, right? Or if you feel savvy enough that you can read that letter, just do it. It's just not something you want to just put on the pile in the corner and forget about. You don't want to live with your head in the sand. But those letters, don't think they're scary. We call them IRS love letters. It's actually, this time of year is IRS love letter season because everyone's just filed. And so all those returns are going through their system, and then you're just getting letters. Most of the time it's just stuff missing, right? Like, hey, they got a 1099 that you didn't claim. Nothing to lose sleep over. You just amend and move on with your life.
Oh, that's like my new theory, by the way. I'm going to adopt that. I'm just going to amend and move on with my life. Like next time my wife gets mad at me, like, I'm sorry, I'm amending this and moving on with my life now. I like this. This is good, good advice.
I like it. Amend and move on. It's all good.
Wow. Okay. This is really cool. So now there are alternatives to the account, right? There's the online tax filing services like a TurboTax or, whatever. Good or bad idea. If good, who are they good for?
Oh, TurboTax is fantastic. TurboTax is a fantastic software for folks with simple situations. If you have a W-2 and you own your home and you've got a kiddo, TurboTax is fantastic, right? There's nothing against TurboTax. Quite frankly, the IRS is actually trying to create their own TurboTax for free for taxpayers, right? They're actually just wrote out a pilot. So it's a fantastic piece of software that I don't discount at all. When you no longer want to be using a TurboTax or a Tax Act or any of those platforms is when your situation becomes more complex. If you're a business owner, you should probably be working with a professional. If you own rental properties, you should probably be working with a professional. If you have a significant amount of investments, right, a K-1 partnership, that's when you should be working with someone. And it's not so much that TurboTax will get it wrong. That's less than my concern. The bigger concern is I don't want you to overpay in taxes. And there's just deductions and ways to report things that TurboTax may not be able to do.
Okay. I have a quick follow-up, and this might be a really dumb question.
No dumb question.
That's why we're here, right?
This is the literal point of the UnMastered classes. We're full of stupid questions. But
I think I just had like a light bulb moment. So when I receive at the end of the year all these different forms, right? The 1099 if I'm paid as a contractor, the W-2 if I'm paid as an employee, like a mortgage interest statement from the bank, all these different things. And then I take those, package them up, give them to my accountant, and the accountant files all those things. Is the government already aware of all those on their side, and they're literally just checking to see if I'm presenting what they think is accurate? Is that actually what's happening?
Yes, that's it. All of those forms you get in the mail, they go to the IRS and they go to you. That's it. It's just, think of a tax return as a reconciliation. All a tax return is reconciling your income and the tax that you should be paying. That's all it is.
This seems like a silly game. Why can't they just reach out to me and say, hey, here's what you owe?
That'd be nice.
Let's save each other some problems.
Well, here's the problem, though. They don't know some of the other things that you pay, and we want to reduce it. So they could do that, but then we'd pay more in taxes, right?
Then we'd pay more.
So the tax return is also an opportunity for us to reconcile it lower.
And also, Jake, for part of the same reason that the federal government designing an app to TurboTax something for me creates about as much confidence I have in them as them telling me what I owe them. I feel
what
like
could possibly go wrong?
Right, I'm pretty sure that
Go ahead, Lance.
Well, so on the same note, though, but let's talk about what you just said, Candace, because that brings us to the second segment of what we want to address, which is sort of the business filings and what we call write-offs. We've all seen that funny clip from
Seinfeld.
Creek.
Was it? Actually, I was talking about Schitt's Creek. There's the Seinfeld one too, but they just write it off.
Write it off.
Yeah. So
what do you mean? The write-off company. You just write it off.
You know what it means.
So this all starts though, I think, with the idea of if I have a business, and Jake and I work with a ton of solo entrepreneur people and helping develop them in personal professional development work that we do. And so, can you just help us break down what is the difference between sort of the LLC concept and an S Corp or a C Corp? And like, how does one know what's the right one for your business or which one is better than another for taxing purposes?
Oh, that's an awesome question. So first things first, if you're working as a sole proprietor, which just means you're working under your name as a business, like you're just self-employed, maybe you're calling it a gig work or a freelancer, but you don't have an LLC, there is zero difference in taxation. You are taxed the exact same way as a sole proprietor versus a single member LLC. There's no magical write-offs you get becoming an LLC. So that's the first thing. The next cool tax strategy is having that LLC elect to be taxed as an S corporation. This reduces your self-employment tax. However, without going into the nitty-gritty of what all the hell that means, don't do this without talking to a tax professional, because more often than not, you need to make sure that your net profits from your business are high enough so that your tax savings outweigh the admin costs. When you start doing these more aggressive tax strategies, additional admin costs come into play, additional payroll fees, tax fees. Like, I'd love to charge your money, but I want to make more money, but I want to make sure you're actually saving more money than what we're charging, right? So that's the next step up. Realistically speaking, for small business owners, there's only ever going to be the sole proprietor / single member LLC or the tax election as an S corporation. It's very rare for small businesses to want to, or for it to be beneficial for them to do the C corporation route because of this fun thing called double taxation. But my main point is here, don't do any of it until you talk to a tax professional, because it could end up costing you more money than saving you.
Fair enough. Okay. So we figure out how we're going to incorporate ourselves and if it makes sense. And then we'll go back to the write-off conversation.
Yeah.
Can we literally just write off anything every time we eat out, like Lance at Chick-fil-A?
Yeah, no.
Do you know he eats there every day?
I don't go to Chick-fil-A. Technically, I ban it based on some things we can talk about in a separate episode between both food and some of their like theological practices in the background. But we'll leave that for like a separate topic.
He buys extra on Saturday so we can have it on Sunday too. Anyway,
shut up.
You're
not my friend.
Can you give
anymore.
us the 101 of what a write-off is and how to use it effectively?
Yeah. Okay. So all a write-off is a business expense. If you have to purchase something for your business that's necessary and ordinary for that business, it is a business expense, aka write-off, aka tax deduction. And you just need to be tracking those items so that then it can be reported on your tax return. So anything that's normal for your business, advertising costs, your podcast equipment, if you go out and you meet a client or a potential client for lunch and you pay for their meal and yours, that's a write-off, right? If you have to travel to a conference, those networking fees, all of those things are all a write-off, a tax deduction, a business expense. Where it becomes a gray area is some of those personal expenses that may or may not be a tax deduction. For example, deducting your home office use, which by the way, totally is a tax deduction. If you use your home office regularly and exclusively for business, we can write it off. Same with your car. If you're using your car to drive places and you're tracking that miles, that's a write-off. But there's a whole slew of gray areas where it also can be really beneficial to work with an accountant. Like, for an example, yes, I have a fairly large presence on Instagram, but can I deduct my skincare regimen just so I can look kind of cute on Instagram?
Ooh.
No, I can't. I'm an accountant. However, can my skincare dermatologist, who's an influencer, who makes 90% of her income through Instagram, do that? Because she's like testing it and then she's linking it? Yes. So there's this huge gray area in the tax code when it comes to this necessary and ordinary for the business, which again is why it's important to work with someone if you have a profitable business and making money.
And you just made Jake really sad because he has an extensive skincare regimen that he goes through every morning.
Like a 9-step serums included. Yeah, I know. I'm so sorry.
It's really, he has that whole like Iron Man mask that lights up that you put on and everything. That, like it's a whole Dr. Brahmer stuff. He's full in.
Can't wait to say it. I'm going to have to start,
So we have all these sort of the gray area and things like that of the write-offs and not write-offs. And, I will say that from just my own sort of dopey experience, this really is where the benefit of a CPA and a tax professional comes in, because, I was able to learn pretty quickly, like, this good, that bad, like, and then begin to figure out how to structure my own life in a way where there were some advantages that I could have and certain things that maybe I thought were advantages that you very quickly were like, yeah, no, that's just a hard no. Yeah, but, and it's like one of those, like, is my dog a dependent? I'm like debating with you. Well, the dog weighs more than I do at 160 some odd pounds and eats $300 of food a month. Like, technically is that? And she's like, no, good try though.
Still no.
So here's the next piece then. One of my biggest fears when we talk about this old mentality of like, I believe audits are going to happen, as Jake said, the men in black are going to show up. But I always thought I had to collect all of my receipts for everything at all times, because if they showed up, I had to hold on to all of my Chick-fil-A receipts in the glove box to make sure that they were, knock it off, Jake, that they were going to be right? Like I had presents. Do we really need to be keeping all these receipts or like, and what's the best way to organize and store this stuff?
Yeah, great question. So here's what I tell everyone who's getting started, who's like, what do you mean I've never held on to an entire receipt in my entire life? It's fine. Again, nothing to lose sleep over. It is the best practice moving forward. So this is what I always tell my business owners. If you went to Target and you bought office supplies and it's truly a business expense, but you didn't keep that receipt, take the deduction. Report it on your P&L and take the deduction, right? I would never say just if it's a legitimate business expense, I would never say don't take the deduction just because you lost the receipt. However, it is absolutely best business practices to keep receipts. To not keep receipts, please don't keep paper. That's crazy. All I want you to do is this. There's going to be two places you're holding receipts. One, which is probably 70% of our receipts, email. You get an electronic email, just store that email into a folder that says receipts and never think about it again. Your accountant doesn't want your receipts. I do not need that noise. And then the other thing is when you're at Chick-fil-A and you get that paper, first thing, I think don't a lot of these places like text you or email. Anyway, if you get a paper receipt from someplace, all I want you to do is download an app, a free app. Please don't spend money on this. A free app. I use Smart Receipts, but there's a billion out there that literally is just an app. You get that paper receipt from, right after you go and get food or whatever you're doing. You snap a picture of said receipt through your app and throw that, recycle it because we're conscious about the world. But that's it. And then move on with your life. And you never have to look at it again. You don't need to link it up into QuickBooks. You don't need to file it away in something really snazzy. That's it. Because the only time you'll ever have to look back at that receipt is if you're audited. So spend the 30 milliseconds to snap that picture and move on with your life.
Can I do everything on credit card? Is that a form of
that's a good question.
Great question. All right. So here's the deal with the credit card statement as a receipt. If it is something that is abundantly obvious, like there's nothing you can purchase from that location that wouldn't be that. Like for example, your Squarespace website, right? That's on your domain. That's obvious. That has to be for your, you feel really good about that. That would be all right, you don't really need that receipt. But if you go to Target and you're buying office supplies, I don't know if you're buying bikinis, Jake. The IRS doesn't know that. So they're going to need to see the receipt for that one.
So Larry's Lovenasium. That is not, I got to stop putting that on the credit card.
You really got to stop doing that.
Okay.
Yeah, we've been talking about this before. You really got to stop doing that.
Oh, Jesus.
Okay. Well, that's good to know. Now I'm worried. Now I got to change my behavior. That's okay. I will. A lot of our listeners dream about owning vacation property, and I feel like everyone has an opinion about what's the definition of a vacation property and what the benefits are of owning it from a tax perspective. I feel like no one's really clear on it, and obviously this I'm sure can change every year with the tax code. But can you give us an overview on what the definition of a vacation home is and what the benefits theoretically could be?
Well, so I think there's two ways of thinking about it. If it's just a vacation home and you're not renting it out, it's for your own personal use. There is not a ton of additional tax savings from it. Let's just be really clear on that, right? We are capped, at $10,000 for what you can deduct from what you can itemize on your deductions for real estate taxes. So quite frankly, most of us are getting tapped out of that just with your primary home. You may be able to potentially itemize, which just means deduct some of the mortgage interest on this vacation home. But at the end of the day, you should not be buying a vacation property for the tax savings. There just really isn't enough there. Now, with that being said, maybe you're renting out this vacation home, right? Is that something you're doing? Are you actually using it as a rental property? Then things can get a little bit more interesting. What's really cool about vacation properties or rental properties or just investment properties is a lot of the times you're making money from the rental and you're, writing off the expenses related and you have leftover cash. You're making money. But we get to take this thing called depreciation, which writes off that amount. And so that at the end of the day, you made money from a rental property, but you're not paying income tax on it. So buying real estate properties, vacation home and renting it out can be a fantastic way for you to make income without paying tax on it. But is it a huge tax savings win? Like you buy a $500,000 beach house and all of a sudden you're getting a $500,000 loss in your taxes? No, unfortunately, that's not how it works.
Right.
So again, we see this all the time. People buy an investment property or rental property and they all of a sudden think like they're not going to pay taxes that year. They've made this huge purchase. So it doesn't exactly work that way. There's a lot that's included or a lot that's involved around, is it active income? Is it passive income? Is it a short-term rental? Is it a long-term rental? So again, if you're trying to invest in real estate for tax saving strategies only, who do you talk to first? Your tax professional.
Call Candace. And does it have to be is a vacation home a certain number of miles away from your home? Is like
no, doesn't have anything to do.
Nothing to do with it. See,
I thought it was a 50 mile. Didn't I read that? It was like a 50-mile thing that if it was less than 50 miles, it can't be a vacation property. I don't know.
Now, that could be something with your mortgage and how it's loaned to you, right? So there's two different loans you can get when it comes to mortgages, right? You can have your primary residence, which is going to be your best rates. You could have an investment property that then they have different ways of calculating how much you can take on in debt because you get rental income, or a vacation property. So that could be part of it. It could be something to do with your mortgage.
Or the swampland in Florida that I purchased that we'll talk about later, Candace, that I thought was a good investment.
We should talk about that.
Candace, are there any kind of like common red flags that you look for when like you're reviewing, let's say a client asks you to look at either their personal financial kind of cash flow situation or their business, anything that stick out in general as like red flags to you that may also trigger like some of Lance's fears about, tax inadequacies, but like what are some of the things you look for as a professional numbers person?
Yeah, I mean, I think there's some simple, easy ones, right? Like, where when it comes, so the big one is when business owners are paying themselves and they're calling it a salary, but you're a single member LLC and it's not a salary. Like things like that, that are just big red flags. Depreciation. So when you own a rental property and it's being depreciated, those sometimes show up really wonky. But again, that's not going to be something you're probably doing. Well, the bookkeeping for the paying yourself probably would be. But just like some easy things you should be thinking of when it comes to business ownership, right? Like right now, you cannot deduct any entertainment expenses. That was all done away with Trump's tax reform in 2018. So that's like a fairly simple red flag, right? Like you can't do that. Virtual businesses that are writing off their entire car, like that could be tough to support if you don't even have another car, at your home. So those are some of the big ones. Again, it's all around just like being way too aggressive with tax deductions. We love being aggressive with tax deductions, but we want to make sure we're following the tax code.
Fair enough. Thank you.
It is. That is, I mean, look, we could sit here and chat all day about 2,000 questions because, again, it's a complicated thing, which I go back to just quickly, if you wouldn't mind, do you genuinely believe that 53% or 47% of Americans like fully understand the tax code as that question was before?
No, I don't fully understand the tax code. I mean, I can be honest with that. Are you kidding? It's like 70,000 pages. Like it's something insane like that. I am an absolute expert when it comes to small businesses and real estate, right? But, don't like, if you want to start looking at like crazy swampland credits or environmental, it's insane. I would have to look all that up, right? So no, I don't think there's anyone that understands the entire tax code. I don't think there's a single person that works at the IRS that does, quite frankly. And I think they would admit that too. I think you just have to find someone who specializes. And so no, most folks I talk to are like, oh my gosh, why is taxes so freaking complicated? It doesn't make any sense to me. And I'm like, I know, me too, sister.
Well, I chuckle sometimes too, because Jake, you'll appreciate this. The level of I don't know what I don't know, as the beauty of the UnMastered class was, there was a point in time when we were looking at buying the house that we live in right now, where I went online to do my own research, which is like the worst idea ever, right? I was like, somehow Reddit is like a bad place to go. But Jake, I read this thing that said that if it's deemed farmland, then you get this really amazing rate from the government on the purchase of the property. And I was like, down the rabbit hole for like deductions that I could then find for converting this into farmland all of a sudden. I was like, if we get bees, now I want to point out my wife is highly allergic to bees, but I was like, if we put them 80 miles away from the property, but technically within the boundaries. So I was like, this is what the UnMastered class is all about. Stick to the basics, just get them information, know who to talk to, right? So because we're almost out of time, we got to ask you, Candace, before we go. Our favorite traditional ending question. If you wanted to enroll in an UnMastered class on a topic completely outside of your current expertise, like something you wish you'd learned when you were younger, what would it be and why?
So it's so very embarrassing because I'm a millennial. So I should know how like technology and hardware works, but I do not. I learned like 2 months ago that there's a way you're supposed to close the tabs on your iPhone. Like I didn't know that. We were talking ahead of time. I didn't know you're supposed to close turn off your laptop before you close it and put it in the bag. I am horrific. My team makes fun of me. We should really have like a director of IT, and that's just me.
100%.
Because I'm so unqualified. So it's just like basic stuff. Like if you ask me, hey, can you connect Bluetooth to this laptop? I'm like, I don't know what you're talking about. It's bad. It's bad.
Lance, do you shut off your laptop before you like pack it in your backpack?
Well, again, since I used to work for Apple, technically, I kind of do know some of these. In the Apple world, yes. Not every time, but you at least once a week should be powering the machine fully off and back on again to clear the processor. And by the way, fun fact, Jake, did you know that what slows your computer up the most on an Apple computer is when you have things on the desktop? It's not how much stuff you have in the computer, the desktop, because that's where the processor pulls most of its fastest information from. So if you're that person that has like 8,000 things on your desktop, you want to speed the machine up, put all of those things into one folder on your desktop, watch how much faster the computer runs.
Really?
Crazy.
I don't know when the last time I turned my computer off. Again, that's why it hates me so much.
I have a hypothesis. Candace, sorry if it's too personal, how often do you wash your jeans?
I wash my jeans probably like every 2 to 3 wears.
Oh, no.
That's what you're supposed to do with lady jeans.
Okay. First of all, Liz, you're definitely shutting off your laptop every time you close it. That is
I really
psychotic.
Don't. I
that
don't.
is
Not
psychotic.
every time. No, at least once a week, maybe twice a week, I'll power everything off and let it rest. But no,
okay. Guys, I need to know, how often are you washing your jeans? My husband would be mortified. He's like, I wash my clothes every time I wear them. I'm stinky.
Twice a year.
You.
Well, with the exception of after I fly. We've discussed this on a previous podcast. So
wait, are you being serious?
No, he's serious.
Twice a year?
He's serious.
Yeah.
Glenn, how often do you wash your jeans?
Well, first of all, I don't really wear jeans thanks to COVID. Everything is sweat material with spandex in my life now because I've just, I've given up. I'm to be honest, I've given up. But no, if I do, every time I wear them. Why? Because I don't wear them that often, and I don't know. That just for me, it seems weird. I don't know. But you go back if you want to listen to our previous podcast. There's a whole discussion around that and socks in bed and all that good stuff. Socks in bed, not a no for you, huh?
Strong.
By the way, Jake, fun story for me. I was like feeling like a big winner because I visited my mother-in-law the other day and she was like, I listened to your podcast. It was so much fun. And by the way, I wear socks in bed too. I was like, that's not helping me. Thank you. I'm so glad you enjoyed the podcast. Love that you're listening, but
love it. Exactly. Well, there you have it. Taxes. Candace, thank you so much. Taxes is a topic we all try to avoid. It's not as scary anymore to me after spending some time with Candace here. Hope you guys all feel the same way. Thank you so much for joining us. We really appreciate it. And of course, if you want to get in touch with Candace, all of our contact info is in the show notes. So please do.
Yeah, and we can't thank you enough. I can't thank you enough for all the wonderful things you've done for me, my life, my family's life, my business. It took me years to find you, but now I can't quit you. So I am super grateful for everything you've done for me and all of us. And remember, keep asking questions. Don't forget to subscribe to the show wherever you get your podcast so you don't miss an episode. And stay in tune for us for more tips on us trying to master the art of adulting and speaking, apparently. But for us, it's all about trying to master the art of adulting. So thank you so much, everybody. And thanks again, Candace.
Thanks, Candace.
For having me, guys.